Wells Fargo earnings are out right now. Earnings coming in at $1.16 a share. Looks like a pretty solid beat. Also taking a look at loans here, coming in at $951 billion. Quarter on quarter, that looks pretty flat, but I'll have to check in on that. Provision for credit losses coming in at $651 million. That is lower than estimates as well. Taking a look at the stock, it's up teeny tiny bit in pre-market, just by 0.5%, but it appears to be a relatively solid quarter. The question for Wells Fargo is, can it wind up escaping all the drama? Net interest margins for the fourth quarter, though, did miss average analyst estimates, coming in at 2.84%. Loans came in stronger. Residential mortgage originations hit $53 billion. Let's get some more perspective here. Alison Williams, Bloomberg Intelligence, a senior analyst for U.S. banks, and Steve Wood, Russell Investments chief market strategist. The headline, the top and bottom numbers, Alison, look solid. What's your take?
I guess the first thing I'm looking at that caught my attention, 76% expense ratio. That flags to me a litigation charge. That's something that we've been watching, something that we've been hoping Wells can get out of the way so they can sort of move on, and that probably relates to the Department of Justice. I'm looking, it does look like there's a charge. I don't see the amount yet, but keep in mind Wells Fargo is the last of the U.S. big banks to settle with the DOJ. You know, we've learned from companies that they have until their 10K to report the full charge. So there's some there. I see the net interest margin missing estimates. I'm going to want to dig into that a little bit. JP Morgan looked like their deposit pricing costs came in pretty solid. So not sure what we're going to see at Wells Fargo. That is something that we're watching.